and welcome to the Small Business Tax Savings Podcast, powered by JETRO and Associates. Get ready for another action-packed episode from our team that will help you save time, taxes, and keep more money in your pocket.
Hello, small business owners, and welcome back to another episode of the Small Business Tax Savings Podcast. My name is Mike Jesowshek. I'm a CPA and founder over here at JETRO. And just to continue where we were and where we've been at the beginning of the year, I want to talk more about tax items. And so as we dig even deeper into tax season, I want to touch on additional changes that you will notice this tax filing season. Did I mention, by the way, that tax day is only 54 days away, but who's counting anyways? So anyways, this week we're going to be focusing on business tax changes. And then next week we'll discuss changes on the personal side. So these changes are really coming from the tax bill that was put into place at the end of 2017. And that first year that most of those items were effective was 2018. So you probably heard us talk about this. You've seen things about these changes. But now it's actually coming to reality because we're filing those tax returns. So again, I'm going to go through 10 items plus a bonus item about changes for starting in the 2018 tax year related to business taxes. So these are changes in a result of the tax bill that was passed. So item number one, like-kind exchanges. These exchanges are now solely limited to real estate. Item number two, bonus depreciation. Businesses can now claim 100% bonus depreciation for property that was purchased between September 27th back in 2017 and through December 31st of 2022. Bonus depreciation now applies to both new and used property. Third item, business use vehicles. Businesses can now depreciate vehicles with the following caps: $10,000 in the first year, $16,000 in the second year, $9,600 in the third year, and $5,760 in the fourth year and any additional years after that. Net operating losses. So net operating losses are now limited to 80% of the taxable income. The carryback or look back period has been completely eliminated. However, you can now carry forward net operating losses indefinitely. Item number five, the employee leave credit. There is now a 12.5% credit that's available for employers who pay employees for family or medical leave. So if you have someone that's looking to go out for family or medical leave, keep that in mind. A 12.5% credit's available. Item number six, research and development expenses. These expenses can now be credited through a 5-year amortization. Item number seven, interest deduction. The interest for businesses is capped at 30% of the adjusted taxable income for the business with gross receipts over $25 million. So if you have gross receipts over $25 million, interest expense is capped at 30% of the adjustable taxable income for that business. Item number eight, Section 179. The limit for Section 179 was raised to $1 million. The investment limit of $2.5 million. The SUV limit is now $25,000, and computers and accessories no longer need to be listed. And Section 179 now includes residential roofs, HVAC, fire, alarm, security, etc. systems. So again, Section 179 limit raised to $1 million. Item number nine, business meals. So as we've talked about, and it's the biggest change or a major change for business owners, businesses can no longer deduct entertainment, amusement, recreation, membership due to clubs, etc. Anything entertainment, no longer deductible. However, food and beverages are still deductible at that 50%. So just keep that in mind. Entertainment not deductible. You can still run it through your business. It just is not deductible. And then food and beverages are deductible at 50%. Item number 10, if you're operating as a C corporation, your tax rate are now a flat 21%, so no more tiered structure. And finally, the item I want to talk about is the 199A deduction. So this deduction is quite complicated, so I just want to give you a very high-level overview of it. This is a new deduction taken on qualified business income, also known as QBI, at the taxpayer level. This is not done at the entity level. This is done on your personal tax return level. Taxpayers are able to deduct 20% of their QBI or 20% of their qualified business income, and the deduction is taken after your adjusted gross income on taxable income, and it this is key to note here, it does not reduce self-employment tax. So many people are saying, well, now that with this new tax law, it might make sense to stay a sole proprietor or single member LLC instead of an S Corp. Just keep in mind that the QBI does not reduce self-employment tax. You still have to pay 100% self-employment tax on all income, or on all self-employed income. Once you hit taxable amounts of $157,500 for single payers, or $315,000 for married filing jointly payers, the deduction gets a little bit more complicated and may phase out. So if you're under those limits, just know that you may be getting a 20% deduction on the qualified business income. As an example, you have $100,000 in income, you can get $20,000 as a deduction. Now, it's important to note that this is a deduction and not a credit. So it's a deduction to your taxable income when determining that tax amount. So it's not a full tax credit. You're not getting $20,000. In that example I used earlier, you're not getting $20,000 as a credit against your tax bill. It's just reducing that taxable income by 20% of your qualified business income. And that's the number that it then is used to determine your tax rate. So again, QBI deduction, very high level, very simplistic idea about it. You get 20% deduction on your qualified business income. So you run a marketing firm, you have $100,000 in profit from your business, you get a 20% deduction, so $20,000, and you pay taxes on that business for the $80,000 that's left over. So well, that was a lot of changes, and those are just some of the major ones. There's really a ton of changes in this new tax law, but these are the ones that I think are going to relate to you specifically. So this was, again, on the business side. We talked about like-kind exchanges, bonus depreciation, business use for vehicles and how we can depreciate those, net operating loss, the employee leave credit, research and development expenses, and now that they can be done through a 5-year amortization, the interest deduction and when it's capped for larger businesses, the Section 179 limit being raised, business meals still there at 50%, entertainment gone. We talked about the C Corp tax rate being a flat 21%. And then we talked, of course, about the Section 199A 20% deduction on qualified business income. So these are changes that I want to talk about that I think are important to you on the business side. Next week, we will be focusing on the changes on the personal side and diving into those a little bit deeper. I wanted to touch business first because most business returns are due before the personal, so I wanted to get that one out this week, touch on personal next week when we're closer to a lot of those personal returns being filed. So just keep an eye out as you're getting your tax returns done, as you're doing your tax returns, keep an eye out for these changes that may be coming through. Now, before I go today, I want to take some time to tease a program that we're going to be launching at the end of the month. And we've been talking about this on our podcast. And this is a project that we've been working on for quite a while now. And it's just an unbelievable asset to small business owners to help manage their financials and taxes and just create that financial peace of mind regarding their business financials. So we're going to be outlining how to set up a solid bookkeeping system for success, how to manage and run payroll, how to save thousands in taxes, and so much more. It's really going to be a platform to use to learn about bookkeeping, learn about taxes, and things that can really help you in your business. And the best part about it, it will be completely free with one caveat. You need to sign up for a Xero bookkeeping software account through us. Once you do that, you'll have free access to this program when we do this teaching for you. So keep in touch, keep an eye out for as we get closer to this launch date if you're interested in this. Also, if you're interested in doing some beta testing for us and looking at it pre-launch, hit me up and I can get you a pre-launch access to it where you can test out the program before we actually launch. Everyone, I just want to thank you again for tuning into this week's episode. We will continue touching on important items, especially during tax season now, in the next coming weeks. Again, next week, we're talking about changes on the personal side. To continue the discussion, join our free Facebook group where we give away bookkeeping and tax information for free that others charge thousands for. If you're interested in joining, just go to Facebook and search Small Business Tax Secrets, and you'll see it pop up as a group that you can join. Join there, and I'd love to connect with you in there and ask any questions that you might have. So I look forward to continuing our discussion, continuing this tax season learning. And if you enjoy our weekly episode, I just ask you please leave a review on whatever platform that you listen to us on and share with other business owners. We want to get this information out. We want business owners to be knowledgeable about what's going on with taxes, what's going on in their business. And if there's a topic you want us to touch on, shoot me an email. send a message in the Facebook group. Hit me up wherever you might find me and let me know, and we can book that into and put that on our schedule. Again, thanks for tuning in for another episode, and I will see you next week.
This has been another episode of the Small Business Tax Savings Podcast from the team at JETRO and Associates. If you have any questions, feel free to email them. tax@jetrotax.com. We have packages for small business owners starting at just $75 a month. If you enjoyed our podcast, please take the time out to give us a 5-star review in iTunes or wherever you listen. This helps us to bring you useful tips to help you grow your small business. Thanks for listening and have a great day.